Welcome, everyone. This is AllMinucOne Quick Shots. Folks, got some bad news for you. Really bad news, I know. It's 2020. Why wouldn't there be bad news? This is actually somewhat of an old story, but I just saw it today, thankfully, due to a brief coverage from Tim Pool and Jeremy from the quartering on his other channel. What is it? Midwestly, I think. In any case, and that is this, that 23.6% of all US dollars were created in the last year. This is insanity, my friends. Absolute absurdness. This will destroy the average household. This is massive, massive inflation. And I'm not saying this to be hyperbolic. I am saying this because it is mind-blowing. Now, I know that they have been doing some quantitative easing, as they call it, and inflating the currency because of the coup and all of the shutdowns and all. It's actually the opposite of what you want to do. I've also talked about getting stimulus into people's hands. However, I'm not a huge fan of stimulus because it just inflates the currency. The only way to keep abreast of these things, of course, is if you are a market person and following this. I suggest following someone like Peter Schiff because he has a good head about economics. And he was one of the few people, aside from Ron Paul, to predict the market crash of 2008. One of the very reasons why I never invested in a home at the time, because I knew better, because I kept my finger on the pulse. But this is from 2 months ago, and because of election and everything else, and the coup and the Great Reset and all the other stuff, have not been paying attention. Hopefully, guys, I have a few articles I want to show you, but hopefully I will keep this under 15 minutes, as is the goal generally of this segment. But here we have the headline above is borrowed from Michael Shedlock's blog, Global Economic Trend Analysis. Although we have tracked the Federal Reserve's massive dollar creation for you, we think the headline frames the frenzy in a dramatic way. No, it's not good unless we pull money out of circulation. Almost a quarter of the U.S. money supply is new, freshly printed, and conjured into existence just this year. A quarter, just this year alone. Having grown by $3 trillion just since March, it is, as Shedlock points out, the greatest money supply surge in history. And I've talked about this before with the national debt. By the way, folks, the Federal Reserve Bank is not owned or run by the federal government. It is a private organization. There is minor, and I mean very minor, federal oversight with this. If you see historically, the calls to audit the Fed have come from libertarians such as Ron Paul or his son, the Senator Rand Paul. Bernie talked about it at some point or another, and I believe Trump had mentioned it in the past before he was running. The last time that someone in power, true power, called for an audit of the Fed, they were assassinated, and that was JFK. So let's understand the power that these people might have. Not saying they did it, just saying, we can speculate. So here is the street. This was from October 15th, and again, the same thing, and it shows you this massive jump, huge. We go back to 1985, and I'm not sure why they only track this far back, but generally speaking, inflation was high in the 70s, which is why there was a lot of a downed economy during the 70s and a lot of problems. And one of the reasons why the Carter administration was run so poorly. So we have this where it went down in 95, and this is largely with the Clinton administration. It was one of the good things about the Clinton administration, and we sort of balanced the budgets, but we had the dot-com bubble, if you recall that, and then the expansion right here. This inflation incurred a little bit of deflation, and the Federal Reserve does this. Apparently, we had some deflation here, but I guarantee you if I put this out on a very long timeline, the difference between these little blips and the rest of history would be like way down here, and then all of a sudden, as you get towards the 60s and greater, that inflation continues to shoot up until essentially Nixon decided, oh yeah, we're not going to have a gold standard anymore because we had that foreign reserve gold standard thing going on after FDR illegally, unconstitutionally banned gold from the United States. In any case, but this is the jump here, guys. It's ridiculous. And here we can look. This is a little bit better of a trend to see how it goes up. And this is talking about money stock, and you can see how flat all of that is in comparison with some spikes, and it just shoots up ridiculously. Now, this is USA Today. This was, I believe, back in May. So they were talking about this because of the coronavirus. It says U.S. is printing money to help save the economy from the COVID-19 crisis, but some wonder how far it can go. It can go so far that it will destroy the very, very economy. This is what allowed, to some degree, Hitler to rise to power. Inflation was a big problem and caused a ton of corruption within, let's say, Mexico. This has happened in Venezuela, by the way. Also, Japan went through a period and then sort of stabilized. This is why central banks are not good. But it says here, the Federal Reserve is creating dollars from scratch at an unprecedented rate, one of the many tools to rescue the economy amid the COOF pandemic. This is May 13th, 2020. And this is ridiculous, folks. It does not do anything. It does not help. Creating money out of thin air just devalues your money. It will help with the big businesses because they get the money first. It will help with the government contractors because they get the money first. And by the time it trickles down to you, it becomes valueless because there is more of it. And then you need barrels and grocery bags like in the Weimar Republic to buy a loaf of bread. This is great if you have a lot of debt or student loan. But in my estimation, this is all about bringing in the Great Reset that the World Economic Forum talks about. Recall that they were doing a pandemic, tabletop role-playing game scenario last October before the COOF broke out everywhere, right? And recall, if you will, look this up, that China knew about the COOF back in last October. First reports were sort of November-ish. They knew about it probably October, September. Trust me, folks, this was around the world by then. Absolutely. There's no way. Wuhan is a gigantic city. It is densely populated. And there is a lot of business there and a lot of people that travel for business in and out of there. This thing has been around much longer than we believed. So here from CNBC, March 23rd, the Federal Reserve just pledged asset purchases with no limit to support markets. So let's look at the highlights real quick. The Federal Reserve announced a barrage of new programs to help keep the market functioning. Among the moves is an open-ended commitment to keep buying assets under its quantitative easing measures. That is code for inflate the currency. And we don't want to inflate the currency, folks. That means your money has less value. That means milk and gas go up. That means that the cost of everything goes up. Your electricity goes up. Now, if you're a globalist, if you're a psychopath, climate change type person that thinks that the world needs to be purged, this might be a good thing for you because, you're going to have massive starvation and hard times. You're going to have people being quite weak. And by the way, we're already quite weak as far as being sheeple and allowing ourselves to be locked down and a third to half of all small businesses being destroyed, while the big corporations, the big companies, and the soft fascism of the United States are being propped up and raised. And all you lefties out there, you love this. This is your type of economic planning. This central bank stuff is exactly part of the 10 planks, the 10 pillars of the Communist Manifesto. But you're fools. You're fools. You'll just go along with it. There are multiple other programs, including one for Wall Street business lending and others aimed at keeping credit flowing. We don't want credit to flow. We want interest rates to be high if it's a time to save. We want things to stabilize. But this is the junk that they do. They manipulate artificially, without the market providing for it, the interest rates. And all the while, the people in the Federal Reserve who own this bank, which is a conglomerate of several people who, usually aren't named, they get to charge the U.S. government interest on this money. About half of our national debt is interest due to the Federal Reserve Bank. Think about that. We're almost at $30 trillion of debt. Half of that is owed to the Federal Reserve Bank. People used to talk about China in the early 2000s and how much debt they have. Every now and again you hear it being brought up or whatever. It's like 10% maybe, something like that. And I haven't checked it in a while, but it's somewhere around there. We owe debts to China. And they point to China. China isn't the issue. The issue is inside the United States. It's very self. The central banking system is a horror to all people, and we will go and destroy nations over it, and we have. The Fed will be moving for the first time into corporate bonds, purchasing the investment-grade securities in primary and secondary markets and through exchange trade funds. And another one from CNBC from August 5th. It says the ballooning money supply may be the key to unlocking inflation in the U.S. I don't even know what that headline means. What do you mean the key to unlock? We want inflation? No. You'll be fine if you're a millionaire. You might be fine if you are making six figures a year in the, let's say, fifth percentile, that upper quintile of people in the United States. You're not going to be fine if you're about everybody else. Get ready, folks. Get ready. Like at this point, I know it's conspiracy theory. It's conspiratorial. It's whatever else. Bill, you're a nut job. No, I'm not. You have your eyes closed. You have a normalcy bias. You are suffering from backfire effect. You are not thinking. You're not preparing. You're not aware. You're going about your business, going la da la da la, and all of a sudden, when you fall off the cliff, and you hit the ground, you're gonna go, "What happened? Why did I break my leg? What happened?" As I fell off the cliff, not paying attention because I'm on my phone, looking at junk social media. It says, with the Fed and Congress pushing stimulus efforts, some investors are keeping a close eye on the U.S. money supply for signs of inflation, long-awaited return. 23% of all U.S. dollars were created in the last year. Folks, that's a freaking inflation. The Fed may not be in control of the money supply growth, which means they won't have control of inflation either if it gets going, Morgan Stanley writes. That's insane. What do you mean they don't have control of the growth? They cause the growth. Normally characterized by slow, steady growth, the U.S. money supply has grown 20% from $15.33 trillion at the end of 2019, where we were at an economic boom, by the way, to $18.3 trillion at the end of July. And guess what? Economic downturn, and it will continue. Economist and former Treasury official Nathan Sheets counters that if businesses aren't inclined to spend, the large money supply may do little to fan inflation. What? The larger money supply may do? The larger money supply is what causes inflation. This is, this is like so Orwellian. Absolutely Orwellian. So here we can look at a troy ounce of gold and the current U.S. price. I recall this being around $2,000. If you go down here, this is, as of August 2020, hit $2,000. And it goes up, of course, the more gold you have. So 5 ounces, it jumps up. And I don't mean comparatively. I mean, it jumps up to much more. I don't recall what the last time I looked what 5 ounces was, but it was something like $8,000 or something like that. In any case, this number here is important because you have to understand that the gold standard that the United States was on, more or less, except for a few times when we got off of it, the gold standard in the United States was stable at about $18 to $22 for about 150 years. That means $18 to $22 could buy you an ounce of gold. That's some deflation and inflation, slightly. Now we're talking about $1,600, folks. Huge, huge difference. And they only stabilize it because the Treasury Department releases bonds and all this other stuff. I'm not going to get into it all because I'm not an economist, and I frankly haven't been keeping up with it myself or reading it about it. But again, trying to keep my finger on that pulse. And if you guys are interested and you want to kind of go down roads less traveled that the mainstream media isn't going to tell you, please follow my channel. I talk about whatever I want, whenever I want. You know, eventually if I get big, I guess I might get banned by talking about something. But, you know, please follow, like, share, and subscribe, all that stuff. I do have other outlets. I list them in my links below, but I've not been good about keeping up with them, and I'm going to try and start doing better about that. But this is scary, scary stuff, folks. But like I said, I wanted to keep this to about 15 minutes, and I'm at about 16 now. So with all that said, this has been AllMinucOne, and I wish you all well.